Good morning, traders. Welcome to the Dots Trader Morning Call video for Tuesday, November 17th. What a difference a day makes here, right? Markets just shrugged off the horrific terrorist attacks in Paris. We started moving along right around 12, right around 11:30, 12 o'clock. We hit a low. Actually, been chopping around at the lows. The market just kind of turned and moved higher pretty much most of the day. So not a bad day for the markets in particular, coming off of a real soft Sunday night opening. Looking at the Dots Trader chart here, the SPY, you can see we had a beautiful outside day reversal. Now, is this something that's going to continue and build? Well, one day does not make a trend, guys. We all know that. So we want to really watch and monitor if we are moving higher. Now, we did get some good participation from the banks, the financials. We got some a good dead cat bounce, if you will, in the retail sector, which has been getting clobbered. Again, these are all signs that that the markets are in trouble if retail can't rally coming into seasonal strength, as well as the transportation sector. So let's dive into the indexes and see where we are here and try to get some clues. Today, I'm going to take a neutral stance here, and I'm going to tell you why. I want to see more movement to the upside, but more importantly, I want to see other important sectors like the technology, like the banks and financials, like the retail, and believe it or not, I want to see energy start to continue to move forward to the upside. Now, energy has outpaced its commodity, which is oil, obviously, but most importantly, I want to see stabilization in the oil stocks, okay, and the oil sector as well. So we got a little bit of a few different details we need to watch during the course of the trading day, as well as what? Our transportation sector and our Russell 2000, which has not participated at all in this rally in 2015. That, to me, puts a big red flag. Now, does that mean that we don't trade? No, of course. We look to pick our spots the best way possible to come up with the best high probability trades, right? So we want to risk less and make more. That's really what it comes down to in trading, guys. All right, spiders, let's take a look at it. Outside day reversal, we fill up that little gap here from the previous day. We're still under that 200. Okay, so that's something that we need to pay attention to, but it's a good sign that we are up. We do have a beautiful engulfing candle. Volume was a little light on the Dots Trader chart here, you can see, but again, not a bad sign. Now we need to build on this. Okay, we need to get it back above the 200, and we need to start backing and filling to base, and then start to move high to challenge these highs here. Okay, take a look at the 60-minute. Beautiful bearish rising wedge. We had that bear flag. We broke that bear flag, and now we're back up again. This here was a 38% Fibonacci retracement, held it to the penny, and now we're rallying back up again. So let's see if we can kind of get a little bit of movement here. If you take let's look at our Dots Trader trend line here. You can take this, and you just kind of go right up in here. You see we got a little bit of movement before we start hitting this downtrend line. And again, even if we pushed into the 207.50, okay, that's good resistance here. We got a lot of overhead resistance, so I wouldn't be too crazy right now to start looking to buy into this. Again, there is a Santa Claus rally that we always kind of anticipate pretty much every year. But remember, guys, having this rally back in October and going into early November is not a good thing, because we want that Santa Claus rally, and we only retraced 38% from high to low here. So I would have liked to see a deeper downside correction somewhere in here, a 61.8% retracement, and then a rally back up again. That would entice me to get long and get long aggressively. But since we only pulled back 38%, I'm gonna treat this rally as suspect at the moment. Okay, take a look at the transportation sector, and here's one of the reasons why I'm very nervous. Transportation sector not participating at all of 2015. As you can see, we're still way below the 200, not even close to being up there now, up at the highs. Now, why? Well, transportation sector, it moves all of the goods throughout the country, and if it's not moving, that means what? People aren't buying, right? Businesses aren't buying. Not a good sign. That's why retail is sluggish. So there's something bigger brewing. Could it happen? Could something happen between now and Christmas, Thanksgiving, even the New Year? Sure. We don't know. So we don't know. When we don't know and we're nervous, or we want to take a step back and we want to kind of reduce our exposure here. Okay, but still trade. There's no reason why we can't trade. All right, let's take a look at the Russell. Again, good gauge of risk, right? For traders, they feel good. They start buying more risk. They take on more exposure. This has not happened. You could see from the highs to the low, this is not a good sign that we're rolling over. Yeah, we did have an outside day reversal again. Volume was a little mediocre. Wasn't as great as other previous up candle days. So again, guys, got to treat the market as suspect right now to this rally, okay? Until we get further proof. Okay, diamonds. Our lagging index was leading. Again, I mentioned not a good sign. Keep an eye on the diamonds as well, because if we start to roll over, or if we can get some symmetry within our indexes. Right now we don't have that. We have market divergence. Why? Because Russell and the transports are lagging the other three indexes that we showed you. So not a good sign. And lastly is the Qs. And the Qs, oh, excuse me, guys. Sorry about that. Lastly is the Qs. Now, remember I mentioned I showed you the top 10 holdings of the Qs. The top really good 5 or 6, Amazon, the Google L, Microsoft, Priceline. Those are the ones that are really running a lot of the show here on the Qs. So kind of keep it, be aware of that, okay? Let's say, put it that way. If you're looking to buy technology, you can actually buy a tech stock and lose money. So if you see, put those big guys up in front of you. Go into Yahoo Finance, put the Qs up, click on holdings to the left side, and you'll see the top 10 holdings on any ETF. And if you see that that your holdings is moving along with the ETF, then you might want to buy it. But just keep an eye, guys, on the technology sector too as well. Okay. Hope it helps everybody. Have a great day. Definitely use your stops out there. We're going to come into some heavy volatility in the next 6 weeks. Should be fun. Have a great day.